Hello everyone, and thank you for tuning in. This is Matt Curfman here with the Matt's Minutes edition for February of 2019. The year is starting off quite swiftly, and we're already heading into March on the day that I record this. One of the things I just wanted to make you aware of is if you do watch this video, this is going to be a little more short and sweet, but make sure you just rewatch on the link below. We included to the January edition of Matt's Minutes. I had a lot more data in there, and all of that we mentioned is really just playing out. We told you, one, that we did not think in the winter or the fourth quarter we were turning into recession, so we thought stay the course. And then basically as we moved into January and now we've kind of closed out the month of February, we're seeing that was in fact the reality. And so as you start to get your February statements, generally speaking, especially in the equity bucket, we should see higher values across your accounts. And so 2 months in a row of that coming off of a dismal year end should feel pretty good, and I'll just say that it's okay to feel pretty good. So we can kind of calm down and we can relax a little bit as we head into March, and then we will wind down the first quarter. Broadly speaking, if you look at the market as a whole and you look at the S&P, the Dow Jones, the NASDAQ, you can see a chart that I've shared here where roughly speaking year to date they're up between 11 and 13% from the December 31st values. If I isolate at Richmond Brothers in aggregate and look across all equities, so all stock, just to get an idea, are we in line? Our equities across all of your accounts are up just north of 22% year to date. And so we're certainly thrilled to be seeing some of that value for all of you come back up. It means higher dollars, it means longer income plans. And so I would just say that we're going to continue to stay the course. If you remember the chart from last year, it was from last month, the roller coaster. I do think we're still on the upswing of that in 2019. So as we continue to get up, eventually we'll crest at the top, and we will still want to methodically be looking through on how do we reduce individual equity or stock exposure, how do we get more broad-based, and for those of you drawing income, how do we build out your 1, 3, even 4-year forward income plan where we don't need to depend on the markets? And then eventually we do think recession is still coming. I hate to say that word in a very positive month, but eventually, whether it's 2020 or 2021, so we'll want to continue to be building up safety nets and shoring up your downside protection, in our individual meetings and discussions and throughout the year as well. So keep that in mind, and just the note is, I guess it's okay to feel good. We have a big event coming up, which would be our State of Your Money and then our halftime report in the fall. But we already have over 100+ people who have responded and RSVP'd to sign up. That event, if you don't remember seeing that, is on March 26th. And it's over at Ella Sharp, and there are 2 sessions. There's one that's going to be around 3 o'clock and then one a little later in the evening for those of you that are working. So make sure you RSVP because those will sell out, and we are capped on our seating for each of those events. So thank you so much for tuning in. Thanks for your continued confidence and trust, and as always, feel free to call us or email us questions@richmondbrothers.com if there's anything we can do to help you and your plan.